Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing my thought process to identify the best trade opportunities each session. Before we do that, if you could take 1 second and just click the like button. If you haven't done so, hit subscribe. If you want to share this with somebody, go ahead and do that. And turn on your notifications so that you'll get updated when we release a new video. Thanks for doing that. Let's get started. So one of the recurring questions that I get, and very fair question, is what is your thought process when you're going through the trade opportunities or when you're going through the trade process? And we'll go through that, just keeping things really basic. Every session, obviously, gold, unique. Each session can be different because we could be putting in a peak formation, lower high in Asia for the day. London could be the middle of the move, or it could be putting in a high or low of a day also, and New York, of course, could be all three. It could be putting in the high and the low and taking out the whole day, or it could just be inside and consolidating. So that comes back to looking at your weekly template. It doesn't matter what pair it is. I talk about the 3-day setup on the major pairs. We'll look at that, but keeping it as simple as possible. I'm looking for simple trade setups. So it's very challenging if you come to the screen each day and you're just trying to figure out where it's going to go. So I'm coming back to my playbook again, looking at the trade setups themselves. So I don't care really what instrument it is, and I don't care if I only get 25 pips. If it's a 25 pip move that's going to be blowing off in one direction without any heat. Now, I like the U.S. session for gold because as the day unfolds and we go into the U.S. session, instead of it taking 45 minutes maybe for 25 pips or whatever, we could be 50 pips in 4 minutes, which again comes back to depending on the setup, if there's news on the calendar, all these things. So each day, obviously, I want to be aware if there's any major news on the calendar, especially for gold. If there's U.S. dollar announcements, that can have major impact, especially if it's a 3-day setup. Previous days, high and low, we talked about that in an earlier video this week. Day 1, day 2, day 3. On all the major pairs, I look for a 3-day setup. Again, I'm looking for the weakest pair if I'm going to sell it, or the strongest pair if I'm going to buy it. Now, I tend to have a bias towards short selling. I don't know why that is. I just tend to be more inclined to short something. Now, that said, when there's a trend day, especially an all-in type day, I will find it very easy to get into a trend day setup. But again, coming back to the idea of trying to identify trades that have weight behind them that I can potentially scale up in size, or if this is just a scalp, 25-cent scalp or whatever that may be giving me, and again, being done and taking that trade and trying to be done in that 1 hour, whatever that second hour, third hour, depending on when that trade happens, and just walking away. I don't like sitting around being on the screen longer. I'm aware that there are gap time trades. Again, there are some fantastic opportunities that, I will allow a market to set up and just place alerts at the highs and lows. It doesn't have to be at these timings, but these timing windows, 8 to 11 p.m. for Asia, 2 to 5 a.m. for London, 8 to 11 a.m. for New York, and that is New York Eastern Standard Time. That is when I will identify my high and my low. So the trade itself sometimes may not happen in that window, but we will have a high and a low in place that I can now put an alert at that I may get in the gap heading into the next session. So instead of me sitting at the screen, I'll go do something else, go for a workout, go for a run, whatever, and I will come back most likely in the hour prior to that market and look for an opportunity. Now, again, even in that hour, it can set up what's going to happen when the session opens. So that first hour will often potentially be a stop hunt back to the extreme, or if it's breaking out, we may now be in a market that is going to put a high or a low in place. So again, each session I'm looking at that and saying, is this going to be a setup for a scalp? Is there a news catalyst, especially in the U.S. session? Obviously, if we're trading one of the majors, the BOE, unemployment, whatever, the interest rates, they can have an impact on any of the other major pairs. Is this going to be a reversal type trade setup? If it's a reversal trade setup, is it counter trend? And if it's counter trend, is this just going to be a scalp trade? Is it a first red day? So potentially now I have a move that could be blowing off or moving quite strongly in one direction for the entire session or maybe even the day. Same with a trend trade. So each session I want to be having a thesis, and number one, when I go into the session, you need to take a few minutes. Again, we come back to that 7-step daily routine for high performance traders. Having a game plan each day to reproduce and duplicate your best trading day, your best day altogether. I start my day early with exercise. I review my trade setups. I go through my affirmations. There's other things I like to do to prepare myself mentally to protect my psychological capital and ultimately my financial capital. I've made a lot of mistakes. I think it's a game of constant progress. You're always susceptible to making errors, but you have to be prepared each day and each session. So going not only yourself physically, mentally prepared, rested, well rested, hydrated, nutrition, in a calm, relaxed state of mind, but also prepared. What are your levels? What is your thesis? Is any of the criteria fitting your best trade setups? Can you narrow this down to a couple of pairs, or are you just, for me, gold is obviously my primary, but I look at the NASDAQ, I'll look at oil, I'll look at the pound yen. I'm looking for something that's just going to maybe give me an easy trade, low stress, keeping it simple and sticking to what I know works. Every session, every day there's trades. And again, instead of trying to just worry about getting as many pips as I can, I'm trying to focus on trades that are scalable, that I can put, a reasonable amount of conviction into. And again, depending on that setup, the size will, that setup will dictate the confidence and size that I'll put into that trade. And once I'm done that trade, I don't keep trading. I think that's a recipe for disaster. You can go off the rails pretty easily outside of your times, or especially if you've been getting lots of movement and you start taking more trades, and then all of a sudden the market goes into a stagnation or doesn't keep moving, and now you're trapped in something maybe with too much size, and you're sitting there stressing, undoing all the good work that you've just done building up to that in that session. So unless a U.S. session, you could be in a trade that could be going for maybe 3 hours. It could be a 1 hour, 2 hour, a third hour move that just keeps going after a news catalyst again. So it's imperative you have a game plan. You show up prepared. You are in a proper emotional orientated state of mind in terms of protecting your financial capital, focusing on your best trade setups, executing to the best of your ability, and then having self-talk and following that process through during the trading session. So again, my focus is on the timings, the high and the low of the day, major round numbers, 50s and double zeros. We'll talk about that. Engulfments and pin hammers, 1 bar stop, 1 ATR. So if I'm entering in on the 1 minute chart, on gold, it could be a 25 pip stop if the candle is 25 pips, but typically in these moves, though, 15 pips would be probably a maximum stop once I'm in the trade, and targeting 25 to 50 pips. And if it's a high day, low day setup or a news catalyst, it could be 100 plus. And we've seen some 200 plus pip moves. And again, understanding the timings of the equity sessions in New York and London. But this in particular, coming back to this question, what am I thinking? Well, here's the thing. I'm trying to narrow down the thinking. So I want to work at the high and the low. I want to focus on my timing window. So if I have a 3 hour window and I'm not at the high or at the low, or if I'm in Asia and I'm inside of a U.S. session range, I have a high and low, or a box, 50 pip box minimum, that is my area for consolidation, and we'll look at some examples of that. So engulfments and pin hammers, people say, where do you get in, where do you get in? I get in at the high or the low. Once they've locked that in, I'm looking to get in at the high or the low at 50s or double zeros. Now that trade could come outside of 50 or outside of double zeros because I'm waiting for them to lock it in. And that comes back to understanding the timing rotation. So if they take 1 hour, 45 minutes to an hour to come down or to go up to hit a high or a low, you could be in that move. But understanding when they get to the high or the low, that may also be the opportunity back in the other direction, especially if it's a U.S. session trade. So we have 3 sessions, Asia, London, New York. That may be a stop hunt back to a trader who's in profit from the gap time or from the London session, etc. Or we may be putting in a peak formation inside of a peak formation from the U.S. session in Asia. All of these little things, but it's a 1 bar stop. Once I'm in that trade, my stop is placed at the extreme. So some occasions it may be smaller in Asia or London, and because the U.S. volatility increases, the stop loss may be a bit larger. It depends on the setup, but typically, 15 to 20 would be a maximum. So today, taking just a look even at yesterday's session, 50s and zeros, we had buying occur below 50 before the session started. Heading into the U.S. session close, they took it up in 1 push, 2 pushes. This is the last move that occurred prior to the close. We had a high put in place above 0 at 25, and then they put in a higher low in the beginning of the day. So my thesis in this particular case is that we have selling above 0 and buying below 50. There's my box. Now, if you are not in the move down, that doesn't mean you have missed the trade. But coming back to understanding timing, the first hour put in a high and a low. The second hour opened up and continued to auction lower. When we get into the low of the second hour, at the end of that second hour, they consolidated sideways and we get an engulfment with a bullpen hammer. But on our 1 minute chart, at the end of our second hour, we have a engulfment reversal in the last 15 minutes prior to the second hour opening up. And this is what what I focus on is I'm looking for the buying or selling to occur under or around the major round numbers. We had a beginning of a new hour engulf and go sideways with our pin hammers underneath of 50 for an explosive move back up through the high of the session. So again, when I talk about understanding timing, at the end of every hour, a new hour is opening. Are we at the low? Have we locked in a low? Have we put in a low yet? Well, at the end of the first hour of that session, no, we had a low, but then the next hour continued to auction lower. That second hour in the last 15 minutes broke structure. So I keep mentioning that term, breaking structure, higher high, higher low, pulls back and engulfs and goes sideways for an explosive move. So you can be in this move, but you'll notice again when we see these drops, this is a great indication, especially when the volume starts to consolidate and have two-sided volume down low, that we're going to get an explosive move. Now, this is an exception. That was an incredible move yesterday, but again, coming back to our thesis going in, we had selling above 0, buying below 50. So essentially, not trying to guess in here and get caught maybe if this isn't set up right for the sell, but being patient enough to understand the first hour puts the high and low in. It continued to auction lower. The second hour then gave evidence near the low, not at the low, because obviously they weren't necessarily going to go all the way down, but we have a buying or a demand area underneath for that explosive move. Take the money, walk away. We come back to the next session. Prior to the next session, we're under 50. We have a high above 50. The market opens up. We've had an explosive move. They've traded through the lower high from the U.S. session. Now again, it doesn't matter what happened yesterday. I'm just focusing on the process. So again, the questions are, first one, are we in a trading range? Am I looking for a reversal? Is this a trend trade? Well, obviously in Asia, the day is just setting up. So no, we don't have a trend trade. We have a high and a low. This is possibly a trading range. It could be a peak formation. It could be a false break reversal. We didn't get down far enough to have a false break reversal. But we did have a 1 hour trade. A 1 hour trade that was over in 30 minutes for an explosive squeeze back up through the high. At the low, underneath 50, in the timing window, back through the high of the day. So again, we come into the new session. We're inside of the previous day's high and low. Obviously, that was a massive range, but we have a U.S. session high, a redrawn U.S. session high, and a U.S. session low that we traded down to in the Asian session. And we have a high of the day in place. The market opens up inside of the high and the low. So I've mentioned this. If we're inside, we want to be trading in the direction if that's already an existing bias back to the extreme. So if the market is, instead of trying to just jump in front of a freight train, we may be in an existing trend trade. So if I'm going to enter the market based on an opportunity that shows up in that first 15, 30 minutes, whatever that may be, I want to be trading back in line with the original trend. So we have a market that at the beginning of the hour prior to the 12 candle window, we get a trigger of a break of the previous hour's high. So coming back to understanding, the new hour opened up, triggered breakout traders, auctioned back for the next hour, 25 pips. When the Europe session opened, do you notice what they did? They triggered the low of that hour before breaking structure, consolidating, and continuing the original move. We have hourly traders possibly short now. We had hourly traders long up here, break on the breakout. High day traders long on the breakout. We have hourly traders short on the break at the beginning of that new hour. We have a break in structure. We have an existing trade back to the high. So the thesis is they're going to go back up at least and hit stops. That's a 25 pip move, but they continue to auction further higher into the London Open. So now we have a market that is not a false break. This is a breakout. This is a breakout. And what does it do? It layers on top and gives us a W. We have traders shorting this. So again, coming back to understanding, traders are short up here, there's stops up here. Bang, we get the re-entry long back to the high, taking out traders who shorted the market. So in the equity hour, I talk about the 3-hour window sets the high and the low. We have a market now that has put a high and a low in place. London has put a high and a low in place in the equity hour. We have a high of the day in place. We want to work from the high and the low. If we're in a trend trade, so if you're in this move and you're holding on to this throughout this session, I don't know why. So when I get into a move, I'm taking money off at numbers or on any sign of weakness or break of that momentum. Done. I said 1 hour. I want to be out of the market in 1 hour. So when I'm getting into the last 15 minutes of this move, guess what I'm doing? I'm looking to get out as the market is blowing off through the high. I know this market at some point will come back or do whatever, but I don't want to sit around. I want to be out. I want to be in the market. I could take 25. I can get back in and get 25 to 50 again. Wow. Great session. Done. Walk away. Come back later in the U.S. session. The market in the gap time triggers the alert. We get a high of the day alert triggered in our hour prior to just near the end of the hour prior to the 12 candle window. The market goes up to 50 again. 50 and 0 is where I consider my major areas for buying and selling for institutional market makers, whatever you want to call them. I don't care what people call them or what their theory is. That's the levels that I'm working at, and that's what I'm looking for. The market sold off back down. Now, if you miss this trade and you come to the screen for the U.S. session, we have a break in structure. So the second clue to all this is we have volume caught up high after a 200 pip move. There's people buying up here still into the high. They clear all that out. and they go sideways into 50. They pin prior to the US 12 candle window. We have a consolidation, and in our second 15-minute bar, we get a long trade back up to the high. And again, we have traders that are short here. So they go into consolidation, and underneath of double zeros, we have 50s and zeros, and we're up high near the high of the week. They go back up and get traders who were short at the high of the day during the gap time. So we're at 50 again, and we're 40 minutes into the hour. The market engulfs, pulls back, and gives a short trade back down into the traders that were long. 2 hours, you're into the second hour before the U.S. session even opens. There's 25, 50, 75 pips minimum. You're done. I'm done. I don't want to stick around for the U.S. session. No major news. But I'm looking for stuff that's simple, that's going to be over quick. I'm not looking to hold on to anything. There was no news on the calendar. The likelihood of this having any follow through after it hits stops, 40 minutes into the hour. When this hour closes, this is a pin. This is 50 minutes into the hour. So when this pulls back inside, this becomes a pin. This 1, 2, 3 to the high. This is the giveaway. 40 minutes and a 1, 2, 3 into the high. Take the money. Am I going to short this? Yes, I'm going to short this. Is this a scalp, or am I holding on for a move all the way down? This is a strongly trending day. I'm going to scalp this. I'll take some off at 25. I'll hold a second piece back to the double zeros. Keep it simple. Have a plan prior to the session, traders. Not every pair is going to move like this, but there's opportunities on currencies. It may be a 3-day setup. There's going to be opportunities on the indexes. New York equity market open, 9:30 New York time. There's going to be opportunities on crude oil. Identify a best trade setup. Know what you're looking for when you go into the session. Don't change your plan. Have a thesis. Stick to your plan. Get paid. If you're wrong, cut your loss. Keep it simple. And it's as simple as that. You can make trading as simple and as complicated as you want. Protect your psychological capital. Protect your financial capital. Take 25 cents a day. Learn to take 25 cents a day really, really consistently, or a session or whatever. And then identify, can you scale that up in size? Can you scale it up in size? Don't sit at the screen all day. Focus on targeting high probability or possibility setups. Be patient and willing enough to wait for those. And then be skillful enough and disciplined enough to know when to scale that up in size and walk away when you're done. Keep it simple. Have a great trading session. End the week on a strong note. This has been a fantastic week, and may the markets
Hi
go.
traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.